Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 trending stocks that have been picking up nothing but buy ratings. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're taking a look at some stocks that have been trending with analysts and in a very positive way. Not only do these stocks all come in as strong buys, those are unanimous strong buys, meaning there is not a hold or sell rating in sight. So we're going to take a look at what these companies do and what analysts are predicting for their stock's future. Now, I came across today's stocks using the TipRanks Trending Stocks page. You can follow along on tipranks.com or download the mobile app by using the link in the description down below. Under Research Tools, we have our trending stocks, and here I looked for the best rated stocks within the last 72 hours. And looking at our list, we had a few that popped out as only receiving buy ratings. The first stock that we're taking a closer look at is ServiceNow. With a market cap of nearly $96 billion, their stock trades under the ticker NOW, currently priced at $472. Now, they are down about 5% over this past year, but have gained over 13% in the last few months. ServiceNow is a software company that offers cloud computing services to help enterprises manage their digital workflow. The company offers its solutions to a variety of sectors, including healthcare, education, oil and gas, telecommunications, government, and more. Their platform has IT workflows, employee workflows, customer workflows, and creator workflows. The company will be reporting their next earnings report at the end of this month on April 26th. Analysts will be anticipating earnings per share of $2.03, which is an increase from the same quarter last year and just slightly ahead of the last quarters, which they beat by 26 cents per share. One analyst from Evercore recently weighed in on the stock, saying that their partners remain upbeat on the whole and they believe that the trends in their business remain solid. They're expecting solid Q1 results, and the analyst said that they would not be surprised to see the stock to continue to perform well on a relative basis. Another analyst from Guggenheim just weighed in on the stock yesterday, as well as increased their price target. The Guggenheim analyst says that the firm sees a favorable near-term setup for both the Q1 report and Q2 guidance, citing surprisingly decent field checks and a potentially strong U.S. federal business. In the last 2 days, the ServiceNow stock has had 5 analysts reiterate their price targets, but overall the company has 27 current analyst ratings, and yes, they all come in as a buy. The average price target comes in at $528 per share, which would be an upside potential of nearly 12% from current prices. Looking at the most recent weeks, our price targets range from an upside of nearly 5% to a high of almost 30%. The second trending stock we're taking a look at today is UnitedHealth. Their stock trades under the ticker UNH, currently priced at $505 per share. They have a massive market cap of $470 billion. Now, their stock is down 4% over the past year, but we have seen some recent growth, and they're up over 6% in the last 3 months. UnitedHealth Group is a diversified healthcare company. They're actually one of the biggest revenue generators in the world. The company provides healthcare products and insurance services, and its activities are split into 2 separate segments, with their United Healthcare, which offers the health insurance, and Optum, which offers data and technology services. UnitedHealth recently reported their latest earnings on April 14th, and despite beating on both earnings and revenue, the stock did decline afterwards as the company was a bit vague on some of their future outlook. For their Q1, the company did report earnings per share of $6.16, coming in 10 cents ahead of analyst expectations. They also reported revenue of $91.9 billion, which grew 15% year over year, and earnings from operations, which grew 16%. Following this report, one analyst from Loop Capital weighed in and increased their price target. The analyst said that the company's Q1 results saw solid upside and that their guidance for the year was conservative. Given their leading star ratings, growing range of services, and expanding provider network, UnitedHealth's value-based care platform should continue driving revenue and earnings. It is also worth mentioning that UnitedHealth pays a dividend and has been doing so since 1990. That is a quarterly dividend of $1.65 for a dividend yield of 1.3% and a healthy payout ratio of just over 28%. UnitedHealth doesn't have as many analyst ratings as ServiceNow, but currently has 10 ratings in the last few months, all coming in as a buy. The average price target comes in at $608 per share, which would be an upside potential of 20% from current prices. Taking a look at those ratings, we're all in double-digit upside potential, ranging from an upside of 12% all the way up to over 28%. And for our third trending stock, we're looking at a bit of a smaller company with biotech company Merus. With a market cap of $954 million, their stock trades under the ticker MRUS, currently priced just above $20 per share. Now, they are down 14% this past year, but have seen 36% growth in these last few months. They've had a volatile week with some jumps up and are cooling off down nearly 14% today. Merus is a clinical stage immune oncology company which engages in the discovery and development of bispecific antibody therapeutics. Their pipeline includes bicolonics for solid and hematological tumors. Merus will be reporting their next earnings report on May 8th. Analysts will be anticipating a loss per share of $1.01, which is wider than that same quarter last year. Looking at their track record here, we did have a big surprise missed on the last earnings report, followed by some outperforms. But more important for a biotech company is those clinical trials, and they recently released interim data for their petosemtamab drug. And that interim data demonstrated clinical meaningful activity in previously treated head and neck squamous cell carcinoma. One analyst from SVB Securities weighed in following this data. They said that the abstract showed robust efficacy, validating the previous efficacy signaled in a larger number of patients. Additionally, Merus provided a regulatory update indicating that it met with the FDA in an end-of-phase meeting. We also saw an analyst from BMO increase their price target. They said that the company's pipeline looks undervalued as Merus now has 2 first-in-class assets that have been at least partially de-risked and a third asset in MCLA 129 with upcoming readout in the second half of the year whose mechanism is clinically validated. Overall, the Merus stock has 7 analyst ratings, and those all were reiterated within the last 4 days, all coming in as a buy. Of course, with biotech companies, higher risk can come with higher reward, and these analysts seem to have a pretty bullish outlook. The average price target comes in at $42, which would be an upside potential of over 105%. Looking at those ratings, on the low end, we have an upside of 71% still, and our high-end price target comes in with an average upside of nearly 140%. So there we have 3 stocks that are gathering a lot of analyst attention recently and all coming in with unanimous strong buys. Let me know your thoughts on these companies in the comments down below and what you think of their upside potential. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence. If you made it to the end of today's video, don't forget to hit that thumbs up button and make sure you're subscribed to the channel as well. Thanks for watching, have a great day, and I'll see you back here next time.